As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Siddharth Rangnekar of CDR India. Thank you, and over to you.
Good evening, everyone, and welcome to Dr. Lal Pathlabs Q1FY25 earnings conference call. Today, we are joined by senior members of the management, including Honorary Brigadier Dr. Arvind Lal, who is the Executive Chairman, Dr. Om Prakash Manchanda, Managing Director, Mr. Shankar Banerjee, Chief Executive Officer, and Mr. Ved Prakash Goyal, the Group Chief Operating Officer. The Chief Financial Officer. My mistake. I would like to share that some of the statements made on today's call could be forward-looking in nature, and actual results could vary from these forward-looking statements. A detailed statement in this regard is also available in the results presentation that is available on the stock exchange website and has been separately circulated to all of you. I would now like to invite Dr. Arvind Lal to share his perspectives. Thank you, and over to you, Dr. Lal.
Thank you, Siddharth, and good afternoon and a warm welcome to all participants on this call. We are here to discuss the Q1 FY25 earnings performance of Dr. Lal Pathlabs. I would like to commence by sharing my insights into the changing market dynamics and the advancements we have achieved. This year also marks our 75th anniversary, where Dr. Lal Pathlabs continues to be a trusted healthcare partner, renowned for its commitment to quality, accuracy, accessibility, and affordability. The diagnostics market in India is expected to grow as people live longer, more tests get prescribed, and the shift from unorganized to organized sectors builds momentum. Our unyielding attention to excellence in diagnostics has earned us the trust of both patients and physicians over the years. Utilizing our digitally enabled network infrastructure, we remain agile to service growing demand for testing. Our custom-built logistics solution further enhances our capability to serve our patients more efficiently. The integration between Dr. Lal Pathlabs and Suburban Diagnostics is progressing as per our expectations. With the Suburban brand, we are making volume expansion a priority. We are making a strategic investment in both marketing and process efficiencies to fortify the brand while enhancing the patient experience. We are creating opportunities to grow sample volumes with the help of hub labs in important clusters around the rest of the country. Our synergistic approach enables us to provide patients with a comprehensive array of tests across multiple categories with speed and precision. Looking ahead, our growth trajectory will be driven by the ongoing transition from unorganized to organized sectors, heightened awareness of accurate diagnosis, and emphasis on wellness, among others. We remain dedicated to expanding our network and enhancing our service standards through operational excellence and innovative technological advancements. I am confident that the capabilities that we have created to achieve sustained growth and further consolidate our market share. Thank you, and I would now like to hand over to Dr. Om Manchanda. Over to you, Om.
Thank you, Dr. Lal. Welcome to our call today. I shall walk you through the evolving industry scenario and progress in our strategy. I am pleased to report that we have achieved 11.3% growth rates on a year-on-year basis. This is a result of consistent execution of strategy of expanding presence in identified towns and cities where our brand enjoys salience, particularly in west of North, Central, East, and across the rest of the country. The contribution from Suburban Diagnostics to the top line is scaling up in line with the initiatives that we are driving on franchising and brand communication. We continue to prioritize broadening and deepening the brand's geographical presence in order to derive sustainable volume and value growth. Our focus, therefore, is on scaling the next year, expanding into Tier 3 and Tier 4 towns with lab infrastructure. We are establishing 20 new labs to broaden our reach, with plans to add more labs as the year progresses. DLPL is present in most prominent cities where we continue to densify our PSC network. Suburban is the fulcrum for the thrust into Mumbai, parts of Western India, including Goa and Pune. We are actively exploring opportunities to expand our footprint there, focusing on assets that align with our core values and strategic goals. Our SwasthFit brand, a steady revenue contributor, has delivered around 25% of the total revenue and continues to expand. The medical centers of excellence, which we have established, are scaling effectively, enhancing patient engagement and outcomes. Driven by a strategic emphasis on sustainable volume growth, these efforts aim to draw patients from unorganized labs, promoting the adoption of a quality and accuracy-backed approach to testing. Our investment in technology and digital infrastructure are delivering concrete outcomes, strengthening brand visibility and facilitating smoother interactions with patients. Patients today access our services across channels, and our infrastructure naturally has kept pace with these requirements. As this metrics evolve, brands like ours are in a strong position to access growth. We remain attentive to market dynamics, adapting our approach to ensure sustainability of outcomes. Moving forward, maintaining a solid financial foundation is crucial. Through focused efforts, we aim to maintain our robust operating metrics and drive a strong cost structure that will form the basis of the growth initiatives. I now hand over to Shanko to delve deeper into initiatives and operational highlights. Over to you, Shanko.
Thank you, Om. I welcome all participants joining this call today. I will proceed to share the business and operating highlights with you. We are pleased to announce a strong start to the year, achieving robust performance in both revenue growth and profitability. In Q1FY25, we achieved a revenue of 602 crores, representing an 11.3% growth over Q1 last year. This growth in revenue is driven by patient volumes, which is at 7.2 million and 21.1 million samples. Patient volume growth for Q1FY25 is 5.5% and sample volume growth is 9.6% over Q1FY24. Notably, we saw a 10.4% increase in patient numbers in Q1FY25 as compared to Q4FY24. Our Q1FY25 revenue per patient stands at rupees 833, which is same as Q4FY24.
Sorry, sir, we are unable to hear you. Ladies and gentlemen, please stay connected.
Hello. Am I audible?
Yes, sir. Please go ahead.
We are strengthening our digital infrastructure and capabilities, encompassing cutting-edge data analytics in order to enhance testing and service outcomes for patients. This is going to be a focus area for us. Dr. Lal Pathlabs and Suburban are driving the omni-channel experience forward with the help of technology. In the period to come, we expect a combination of volume gains and realization mix to drive the revenue growth. This shall include favorable test and geographic mix, attraction in bundle testing, and build-up in volumes in specialized tests shall also contribute to this. In conclusion, I would like to emphasize that we are progressing as per plan on our growth objectives. Our future performance will be guided by expanding our footprint in identified clusters, enhancing our digital capabilities, and enhancing patient service outcomes. Thank you for your ongoing support and trust in our journey. This concludes my opening thoughts. I would now request Ved to take you all through the financial performance. Over to you, Ved.
Thank you, Shanku. Good afternoon, everyone, and warm welcome. I am sharing some of the key financial highlights for Q1 FY25. Revenue for Q1 FY25 came in at rupees 602 crore against rupees 541 crore last year same quarter, a growth of 11.3%. Revenue per patient for Q1 FY25 is rupees 833 versus 789 in Q1 FY24, Sample per patient for Q1 FY25 is 3.9%. EBITDA for Q1 FY25 came in at rupees 170 crore versus rupees 146 crore in Q1 FY24, registered a growth of 16.2% with an EBITDA margin of 28.2%. PBT for Q1 FY25 came in at rupees 150 crore, registered a growth of 27.6% with PBT margin of 24.9%. PAT for Q1 FY25 came in at rupees 108 crore versus 84 crore last year same quarter, registered a growth of 29.1% with PAT margin of 17.9%. EPS in Q1 FY25 is 12.8 rupees versus 9.9 in Q1 FY24. Net cash and equivalents as on June 30th, 2024 is rupees 1,044 crore. We are pleased to announce that the Board of Directors has approved an interim dividend of rupees 6 per share for FY25. With this, I conclude my opening remarks and I would now request the moderator to open the forum for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take our first question from the line of Rahul Agarwal from Ikigai Asset Management. Please go ahead.
Yeah, hi. Good evening, everyone. I had 3 questions. Firstly, on the tier 3, tier 4 markets, as you're expanding infra, I just wanted to know any learning from patient behavior here. Like, how are these patients different from metros and tier 1? What are they seeking for from a brand like yours?
I'll ask Shankar to respond to this question, Rahul.
So in terms of expansion into tier 3, tier 4, primarily it's a lot about looking at local unorganized players, and we are going to compete with them. And our offering there is quite similar to what we offer in tier 2 and tier 1 cities as well. So we lead with quality and service, and obviously we are finding quite a lot of patients and clinicians who are embracing us in these cities. So the offer is really not significantly different from what we are doing in our other cities.
So is the pricing very different, or even that remains the same?
So Rahul, I'll probably slightly give you a higher level perspective. What we've seen is that most of these smaller towns, their behavior is influenced by nature of the prescription by doctors. What we are seeing is that the healthcare is now traveling to tier 3, tier 4. And I think it's a bit of a qualitative comment. I think overall quality of medical manpower is also going up. As more qualified doctors settle down in smaller towns, they tend to prescribe tests which are also of higher order. So I think this is more a market evolution where we will see level of testing going up with time, and directionally it's quite visible in our numbers as well. So I think that's where I would want to make a comment.
Got it. Secondly, on this medical center of excellence, just wanted to know, could you elaborate what is this exactly? Are we putting up a different infrastructure here, or is this the current lab is getting transformed into something of a similar?
I think it's a good question. I'll explain to you. I think you guys cover a lot of pharma businesses. So what tends to happen, if you look at the journey of this entire pathology, most of the differentiation in the past has been the service, branding, brand awareness, top of the stuff and all that, right? But as we have progressed in the last 20 years, the market has grown, more competition has come. So everybody is offering the same thing. Now, the only way you differentiate is that you start looking at different segments. Like in pharma, you have a gastro division, you have an onco division, you have that, you have this. So right now, it's more.
Ladies and gentlemen, we've lost the management connection. Request you to stay connected, please. We have the management team back on call.
Yeah.
Are you able to hear us?
Yeah, sorry. Yeah. I'm sorry, we are having some technology issue this time. So anyway, I don't know where maybe I'll repeat the whole thing. So Rahul, the answer to this question is we are trying to segment the market and look at broad segments, and especially on high end, the segmentation is done based on disease state. And that's how we have identified certain segments like onco, autoimmunity, reproductive diagnostics, and trying to get more focus from the corporate side, so that whether it's introduction of newer tests, whether it's introduction of new communication with the medical fraternity, organizing seminars, or creating patient cohorts. So a lot of those activities in a focused manner, we are trying to create these categories, and that's the whole idea. Operationally, though we have some people on ground, but it's not really, we are not trying to create different teams for these segments.
Right. So these are like existing people working at different labs which are identified as where you want to increase communication and you want to focus on specific specialty. Is that correct?
Yeah, it's I would say higher focus on marketing efforts. Everything else remains the same. That's it.
Okay, good. And lastly, on this Swasthfit specialized portfolio, just wanted to know, I know that it's small right now, but what kind of scale or total mix, into overall Swasthfit do you visualize over the next 3 years?
For Swasthfit?
Yeah, Swasthfit specialized portfolio.
Okay. So the Swasthfit specialized portfolio is primarily, aimed towards clinicians, and we are still kind of working on it. It's not something which has reached the level of scale for us to differentiate and start reporting those numbers separately.
So Shanku, I understand. What I was asking was, it's more like a 3-year view. Would you visualize like what kind of a specialized mix would you have within Swasthfit? Would you have that?
So right now,
this is Dr. Lal here, Rahul, and the people around India, especially in these tier 3 and 4 towns, they have not realized the importance of these so-called non-communicable diseases and lifestyle diseases, which we are trying to make an awareness.
Ladies and gentlemen, please stay connected. We have the management team connected now. So please go ahead.
Yeah, so this is Dr. Lal. Rahul, I was trying to tell you that the importance, is of the non-communicable or lifestyle diseases, which we are trying to awaken in these tier 3, tier 4 towns. And that is also a part of why the Swasthfit is doing well.
All right, I'll take it more offline. Thank you so much for answering my questions. Best wishes and call back in the future.
Thank
you, Rahul.
Thank you. We have our next question from the line of Karthik Chellappa from Indus Capital Advisors, Hong Kong Limited. Please go ahead.
Thank you for the opportunity. Sir, I have 3 questions.
Sir, we are unable to hear you. Can you speak louder, please?
Okay, is this any better?
Little better. Yeah.
Okay, great. Sir, I have 3 sets of questions. The first one is, if we were to look at our volume growth, let's say of about 9% or so, could you give us some sort of perspective on geography-wise how that is faring? I mean, which are like the geographies driving double digit and which are the ones which are still lagging?
So, Karthik, I think we are not giving geography-wise split quarterly, but once in a year we are giving. Having said that, the geographies like which is rest of North and East, which obviously are performing well and they are doing better than our company average. Where we are going much deeper, which is let's suppose rest of North and especially UP, where we are going tier 3 and plus, that is obviously the higher growth as compared to company growth.
Okay, got it. My second question, sir, is what would be the like-for-like price increase that we have taken on a year-on-year basis across tests?
We took last price increase that was in February of 2023. And we completed 1 full year of cycle of that in Feb 24, and we have not taken any price increase, and neither we have intent to take as of now.
Got it. Which means if I were to look at, let's say, the realization per test, which is probably up 2% year on year, that's probably driven more by mix, right, rather than anything else on a like-for-like basis.
Absolutely. You are right.
Okay, great.
It's a mix that is driving this revenue.
Sorry, sir, I just missed the last part.
No, you are right. This is the mix which is driving this revenue per patient up.
Okay, got it. And last question, sir, would you be able to share the revenue and EBITDA margin for Suburban this quarter?
So, Suburban growth this quarter is about 8% and EBITDA is about 14%.
Okay, 8% revenue growth and 14% EBITDA margin. Okay, got it. Thank you, sir. Thank you very much and wish you all the very best for the remaining quarters.
Thank you.
Thank you. We'll take our next question from the line of Binay from Morgan Stanley. Please go ahead.
Hi team, thanks for the opportunity. The 8% growth in Suburban you commented is YOY growth. So basically you would have done around 40 crore or so of revenue. Is that YOY number that you gave?
Yes.
It's a YOY.
Yes.
Same quarter last year.
Yeah.
Any reason for Suburban growth to be lower than your overall growth because or is it any comments on that?
So actually, I know this is a question which is on everyone's mind. So we are, I think the number doesn't show, but we are not unduly worried about this. I think the fundamental thing what has happened in Suburban is a very, very strong strategic shift that has taken place in that company. This company used to be more driven through doctors' network in the past, own infrastructure in the past. We are strictly going by franchisee infrastructure, direct to consumer. There was a lot of the business of CRO also, which actually was not a business which was very B2B, not a sustainable thing. So we are trying to build this company more direct to consumer, make sure that health checkups and things like that. So I think overall directionally 8.3 is definitely an improvement from what we have experienced in the past. So directionally I think we are getting more confidence about Suburban. So I'm not really too much worried about this number. I think, sorry, what is it? No, okay, Wade is telling me core business growth is 13%. So I don't want to get into this. To me, one number is where we stick to. We don't really slice this number into core and non-core. I stay very confident on Suburban. That's the way I would say.
Right.
This business is, it's actually not run quarter on quarter. It's a need-based business. You just keep doing your work slowly, you will get the results. So I'm very, very sure about this, that look at margins now 14.1%. There was a time this company never actually before COVID, even before our transition, also pre-COVID had single-digit margin. So there is an improvement which is visible. There are green shoots there.
Right. And sir, secondly, on your own margins, could you talk a little bit about, because in the past we've always seen that quarter two is usually the strongest quarter for the company, and given revenue leverage that falls in, so margins also tend to be the highest in quarter two. Would you sort of expect a similar trajectory into this year also?
Yeah, quarter two is always higher. You're right. So quarter two actually obviously most of the spike actually happens around September. So, but there is no reason why it should not happen because the season, rains, etc., all that happens every year. But as the revenue tends to be in absolute terms also higher in Q2, everything just flows into the margin. So I presume that Q2 will always remain higher margin compared to any other quarter.
Right. So in the sense, margins could at least hold up or inch up on an annualized basis from these levels as you are getting leverage gain, like it's visible in your tier 3 revenue.
It gets knocked down in Q3. So I just don't look at quarter-wise. My always eyes are on the annualized margins, where we should really focus.
And sir, lastly, just on competition, like after many calls, you've not made much comment on competition in this time around in the call. Is that because you see it easing, or there was not much to add? That's why it was not there in the opening remarks.
So I think there are two directions one can talk about competition. One is the intensity of competition, which to my mind will continue to remain. It was always there. I think competition became visible because a lot of private equity money, and I think they had a different format of cash burn, etc. They were spending a lot of money on promotion, which to me has eased off. That's why they are not that visible now. So competitive intensity from visibility perspective has come down, but it's not that they are out of the business. They are still there.
Correct.
Those companies that one used to talk about, they continue to operate. But I think that the spend to acquire customers, spend to actually just be visible anywhere and everywhere, that has come down. I think the other intensity in terms of price, predatory pricing, this kind of promotion, this 199, 99 rupees test and all that actually also has gone away. But in terms of number of players, I think that intensity still continues. And I think as the overall market is growing and, healthy sort of margin profile in the industry will always attract competition. And I've always maintained competition is good for the industry because it overall brings up the table in terms of quality, level playing field. And at the end of the day, organized market still has to grow because it has to grow from unorganized, and which is a very large segment. So there is a space for everyone to be there as long as there is healthy competition. I think to my mind, that extreme unhealthy competition has now become healthy competition, but competition is still there.
Great. Noted. Thanks, team.
Thank you. We'll take our next question from the line of Prakash Kapadia from Spark PMS. Please go ahead.
Yeah. Thanks for the opportunity. Could you give us some sense of, specialized test as a percentage of overall revenues maybe last year? And, do we see that as a differentiator going forward? Because we seem to be investing in R&D. We seem to be doing a lot of work on newer tests. So where are we in our journey? That is my first question. And secondly, on Suburban, what will it, take to get that inflection point? Because, it's almost now 3 years and, we've been investing in process. We've built the infra. We've, transitioned from being a doctor advocacy to a consumer brand. And I think we are still number 3 in Bombay. So, what will it take for us to, grow Suburban at faster than company average? Those are my 2 questions.
Right. Hi, Prakash. This is Shankar here.
Hi, Shankar.
I think on the first question regarding specialized, so, the specialized portfolio is, again, the way we define it. Because the specialized portfolio definition can vary from organization to organization.
Right.
But the way we define it, it currently contributes about 23% of our revenue. And, versus, let's say, similar period last year, the contribution would have grown by about 1 1.5 percentage points. So yes, it is, that contribution is slowly increasing. Is it a differentiator? It is a differentiator in terms of our ability to really get into, larger institutional businesses and also, get key opinion leaders to kind of endorse the brand. Is it a huge volume builder? As of now, like I said, the contribution is more or less stable, maybe 1% up over a similar period last year. Coming to the question on Suburban, I think the way to look at Suburban is that, there is a core geography focus that we talk about, and that geography is slowly and steadily responding for us. But yes, as a one number, when we look at what is happening to Suburban, there is quite a lot of non-core business which is still a drag on the overall number. And one would imagine that it still would take maybe a few more quarters for us to start seeing the overall Suburban number growth rates to maybe move to a double digit and early teen level. And after we reach there, we'll see how we can get it going faster than LPL.
Okay. And that would be, Shankar, from Bombay only, or this Pune or Goa initiative will get us there?
No, so we have defined Bombay, Pune, and Goa as the three core. I think that those are the three geographies that we are spending all our efforts on right now. Those markets are responding quite positively as well.
Oh, understood. Thank you.
Thank you.
Thank you. We have our next question from the line of Kunal Randeria from Axis Capital. Please go ahead.
Hi, good evening. My first question is around Swasthfit. It's around.
Mr. Randeria, can you use your handset mode, please? Your voice is breaking.
Sure.
I hope this is better. Yeah.
I'm sorry, we've lost his connection. We'll take the next question from the line of Sumit Gupta from Centrum. Please go ahead.
Hi, thank you for the opportunity. Yeah, so I have some questions on Swasthfit. So I just want to understand what is driving Swasthfit overall. So if you see, like, overall contribution has been increasing on a sequential basis also. And can you explain how much is coming from rural and urban?
Okay, so let me first try and, hi, this is Shankar here. Let me try and first take the first part of the question as to, what is driving Swasthfit. So there are three, streams that we see. First and foremost, there is this whole awareness amongst, the public regarding doing preventive testing. So the whole area of in the metro cities, as well as our formulation, our kind of approach that we have put on online, etc. So there is a slice of that preventive wellness market that we see is helping Swasthfit grow. Secondly, there is also something which we see as channel with channel expansion. We also notice that there is some upselling which happens, in the channel. And lastly, we are also seeing in certain markets that clinicians are moving towards starting to prescribe packages. So those are really drivers. And as we expand our reach further, metro as well as tier 2, tier 3 kind of towns, we see that this Swasthfit growth is likely to continue. That's really maybe the first part of the question. In terms of split between urban and rural, now that's a very, I think we haven't got those numbers ready. We will, so for us it is primarily, from tier 1, tier 2, tier 3 towns. We'll have to see what is the exact split, and maybe, we can maybe share that number subsequently sometime.
Okay, sir. So, sir, over to take a broader view over the next 3 to 4 years, what is the peak contribution that you you expect this Swasthfit to contribute to overall revenue?
That's quite a pie in the sky kind of question. at least one thing we can definitely foresee is that, if you see next 3 to 4 years, it should be higher than where we are today. But how much higher and where is the limit? I think that's something which we are still trying to work out.
We did a math and we found out that the last 5 years, directionally every year we are increasing by 1.6% contribution.
1.5% to 1.6.
1.5%. Now, obviously, that was on a much smaller base. So let's hope that continues for some time for next 2 to 3 years.
Okay, sir. And just one more question on the margin. So how do you see the margins inching up, faring well due to be it SwasthFit or overall business?
See, Smith, as Dr. Om mentioned, you don't see margins quarter on quarter, but annualized margins are.
Hello. Yes, sir. So overall, like over the next 3 to 4 years.
We said, in a longer term, we said, last call, 26-27%, around 27% kind of margins. Because we also, doing a lot of investment, we are going deeper, we are spending more, and a lot of new investments are required, which will, give obviously top line, but in a longer period. But in a longer term, I think, it is. You don't think these kind of margins much sustainable is around 27% kind of margin.
Okay, sir. So just one last question. What was the revenue contribution from North and West, the overall geography mix for this quarter?
This quarter, I think it's, again, quarter-wise, it will not be representative, but I am saying we had like Delhi NCR, which is 31-32% kind of, contribution we have from Delhi NCR, and the rest of India is balanced.
Okay, sir. Thank you.
Thank you.
Thank you. We'll take our next question from the line of Adrit Chaturvedi from Nomura Financial Advisory and Securities India. Please go ahead.
Hello. Yeah, I would just like to follow up on the awareness campaign bit that you had mentioned earlier. So in these awareness campaigns, are there also any discounts that you're offering to drive up a lot of these bundle testing volumes?
So I think these are two different things in itself. I think, bundle testing by definition is discounted. So that, there are awareness campaigns which are built on, promoting the bundle test. Like I said, if you look at a package, the package is inherently itself discounted. So that's one part of it. But I think some of the maybe visible campaigns that you observe, those are more to do with, building awareness of the brand and the service, which is slightly independent from specific, package promotions.
Okay, so would you have the number handy at you if you could give it like at MRP, if there are any kind of increases in these bundle testing? Because right now they're discounted, so there's no true sense of volume that we could gauge. So if there's something like a GMV number on that?
So I didn't get your question. So what are you expecting? What discounting?
No, so generally, these packages are discounted at a 20 to 30% kind of, discount on MRP, and depending on the packages. So it's a bit of range which is ranging 20 to 30% kind of discount.
Okay, thank you. And also, I think a lot of these bundle testings are also driving up your test per patient, right? So right now it's at 2.9. As the share of this increases, do you have like a sense of how up it could go? Like it will go across 3 or like a 3.1? Like, or is there a vision there that you would like to have more tests per patient or an average number that you track?
So we don't have any operational target on saying that I want to drive tests per patient. I think our operational targets are more around, increasing our reach and also making these bundle tests available and promoting them. So naturally, we see by doing all of this, tests per patient grows. as well as revenue per patient grows. Now, we don't really work on a target saying that I got to grow so much basis this, because it's also, a lot of other factors which drive, including geography mix, specialized test portfolio, and also, the channels through which we sell. So we really don't work on a specific target on that. But as the contribution increases of Swasth, the tests per patients are likely to go up.
Okay, got it. And just finally for me, so this specialized portfolio now, so now that it's like 23%, what kind of gross margins are you seeing on that? And I presume that they'll be a bit like lower on the lower end of the whole portfolio.
So gross margin is different on this specialized versus routine, but net on EBITDA level, I don't think there is much difference, because servicing cost is, these high end, mostly we are getting outsourced from hospitals or some third parties where we just spend on logistics. But on B2C, there is a infra cost, servicing cost, which is much higher. So gross margin different, but on EBITDA level, there is no much difference.
Like, could you qualitatively or like tell me how different could they be? Like, is like an average specialized versus a routine? Like, what kind of gross margins differentials are you observing?
So those are very difficult to measure, but we are measuring on bottom line, which is net on EBITDA level, which is.
Okay, and do you have like a mix of the institutional business through Swasthfit that you're doing versus your retail?
Swasthfit is predominantly a retailed product. It isn't so much into institutional part.
Okay, fine. Thanks a lot. Thank you.
Yeah.
Thank you. We'll take our next question from the line of Kunal Randeria from Axis Capital. Please go ahead.
Hi, good evening. Sorry I got disconnected earlier. So apologies if my question has been asked. So you have been expanding aggressively in this tier 3, tier 4 cities. So is the Swasthfit contribution from there also?
Sorry, can you repeat the question? Aggressiveness.
So is from tier 3 and tier 4, so a company level average for Swasthfit is around 25%. So even from tier 3 or 4, is it similar or would it be substantially lower?
So, right now, I think there was this question was asked earlier, urban, rural, split, etc. I don't think we have the numbers handy. So I think once we have those numbers, we will look at it and see whether it's different or not. However, that may not be the right metric, because the competitive set and the growth strategies in these markets could be slightly different. Tier 3, tier 4 versus a metro or a tier 2 town.
Got it. Okay. And second question is actually for Ved. Ved, you mentioned that 27% is the kind of EBITDA margin you're comfortable guiding with. You're already at 27%, and I'm assuming that the Suburban should, improve margin, which means the core margin, the core ex-Suburban margins should trend down in the coming year. Is that because you'll be making higher investments? If you can just run us through your thoughts.
Yeah, Kunal, it will compensate through higher investment in newer markets and, spending on our awareness, some bit of digital and automation, all these things.
Got it. Okay. Thank you.
Thank you. We'll take our next question from the line of Shaleen Kumar from UBS. Please go ahead.
Yeah. Hi, sir. First of all, I'm not sure if you have already answered this question in some other way, because I got dropped off for like 4-5 minutes in between. But I still ask here.
Sorry, sir, can you use your handset mode? Your voice is not coming clear.
Is it better?
A little better, yeah. Please go ahead.
Yes. So, two parts of the question. First, we can see that our margins are improving and they're being consistently improving, and I believe that we've been investing in a growth as well. So, can you talk a little bit about how we are investing for future growth? In terms of maybe more of the, you're thinking of more of accelerating our service, patient service centers or entering into new segments? First part is that. And second part, when will we see the impact of that coming in? I mean, difficult to time it out, but when you think it could be any positive momentum on the growth, maybe 3 months, 6 months down the line, you can see because of the investments happening. So that's largely the question.
Right. Okay, Shalin. Let me try and answer that. So, in terms of where we are investing, it is in quite a few dimensions. I think Om mentioned about these 20 labs that we are in the process of setting up. So first and foremost, it's in infrastructure. So, new lab infrastructure. And, accompanying that, obviously, you have other overhead costs that get built into the system. Over and above that, we are also improving our spending, whether it's on the digital channel as well as in offline, to build awareness and also see, how can we drive more patient acquisition activities. And as we expand more into non-core geographies in West and South, obviously the spending needs are substantially higher than in brand strong markets. So primarily, those would be where, these spends are going to keep going. And lastly, it could also, some of it will also go into our, frontline manpower expansion in sales and marketing kind of area. Now, your second question was where can we see the impact? Now, actually, this is an ongoing activity. It isn't as if that, we started this action a few quarters back. This is an action we continue to do over a period of time. So what we see benefits today are a result of actions which have been taken maybe a few quarters or a year back. So it's a rolling action. So in case you are expecting a sudden spike jump because of these investments we are making, it may not be so, but yes, steady growth and also ability for us to do better in the newer geographies that we are entering is what we see as the likely outcome.
Right. So is it right to assume that at least the intensity of our efforts has gone up because of our healthy profitability, our a strong position in terms of the cash and all availability? So the intensity vis-a-vis, let's say, past 2-3 quarters versus where we are right now, it should be better, right, because of where we are. And hence, I'm not expecting, a step jump, but a gradual improvement should be followed if the intensity is high or intensity is increasing.
So intensity, I would say, is because of two reasons one can look at. In our core geographies, this whole expansion into tier 3, tier 4 is happening, which needs quite a bit of, investment from our side. And also in the or let's say some of our weak brand markets in West and South, there is investment required. And the new channel that we have started spending on, which is in digital. So these are where the whole promotional spend is going. And yes, the outcome expected is a gradual, improvement in our growth rates.
Right, sir. Any new segment you are trying to tap in, like in your presentation, with that, been mentioning about, test patient fertility, etc. So any kind of these kind of segment which where you see a lot of, you're kind of getting excited about?
Sorry, what was the example you mentioned?
In this segment. Sorry, go ahead, sir.
So I think in terms of, segmenting the market, Om mentioned, that there are various categories that we are trying to create and work on. Obviously, the exciting area is around non-communicable diseases. That's the whole area where SwasthFit and some of our other, approaches are really focusing on various things around that. And also, some of these specialized areas in and around, genetics and, testing in that area.
Got it, sir. Got it. That's it from my side, sir. All right. Thank you so much.
Thank you.
Thank you. We have our next question from the line of Deven from Marcellus Investment Managers. Please go ahead.
Yeah. Hi, Ved. So for this quarter, our effective tax rate is around 28%, which seems to be on the higher side. So just wanted to understand why is that.
So there is the deferred tax and suburban depreciation, which is obviously has impacted. There is some adjustment on account of deferred tax, but on an average, this tax rate is not changing. If you will see annualized basis, I don't think there is a change in tax rate. So don't see this quarter as a representative quarter for tax rate.
Okay, got it. And secondly, currently, what's the net cash position as on 30th June?
1,044 crores.
Okay. Thank you.
Thank you. We have our next question from the line of Abdul Kader Puranwala from ICICI Securities. Please go ahead.
Yeah, hi. So thank you for the opportunity. So in the past, we have highlighted some bit of a competition coming directly from hospitals, where they are trying to forward integrate. So, any thoughts on how we can tackle this, or any measures we have already taken in that in those areas, if you could highlight?
So, our experience is the hospital competition is very limited to where their brand salience is there, and that's mainly in some catchment area of 4-5 kilometers. Building a large network for hospital business is very, very challenging. So we are not unduly worried about that. As I keep mentioning, that it's better that good name, good quality name come into the market, so the overall table will go up. But there have been 4 or 5 such players who've come in, but they have done well only in those markets where their hospital brand is strong. And most of them are also listed players. I don't think there's any unlisted player who's trying to do this. So it's okay. There's a lot of space in the market for competition to be absorbed.
Sure, so understood. So my next question is with regards to the underlying growth in Q1. So if I exclude, the 8% growth what you mentioned about Suburban and Swasthfit, the balance business also seems to have grown at 7-8%. So any thoughts over there? Is there some bit of a lumpiness in a few tests due to which the growth was in single digit?
So, excluding, looking at growth, excluding Swasthfit may not be appropriate because, like I said, in terms of, the way Swasthfit business is coming, there are places where upselling is happening. Also now some doctors' prescriptions are moving towards Swasthfit. So something which was a non-Swasthfit earlier may also be turning into Swasthfit. So I think we need to look at the totality of the business. You can look at maybe Suburban separate and LPL if you want to look at organic, maybe that will be a more appropriate way to look at it.
Got it. And one final one, if I may. So in terms of the margins for Suburban, so I understand we have put considerable efforts to improve the margins here. But on a sequential basis, also, we did, I think, close to 17% last quarter, and now it's close to 14%. So just wanted to understand, is there any lumpiness into this business? And on an annualized basis, what is the kind of a sustainable margin we should look forward for next 2 to 3 years perspective?
I really won't go by a few percentage here and there because the base is too small. 40-50 lakhs can swing that margin. So our focus clearly in Suburban is to see higher volume, higher top line growth. So I won't be worried about too much about these margin fluctuations. For next 2 years, we just want to make sure that we get our growth trajectory right, and then everything else will fall in place if you have good top line growth.
And plus, if you see quarter on quarter, it's improving. It's last year same quarter it was much lower. So from that sense, because there is a quarterly impact, increment also. So there are annualized basis. I don't think we are very confident that we should be improving.
Got it, sir. Wish you all the best. Thank you.
Thank you.
Thank you. Our next question is from the line of Pranav Chawla from Antique Broking. Please go ahead.
Hi, sir. I have just one question majorly on your Delhi NCR market. Have we seen the growth rate of NCR slowing down over the past years when compared to the past year's performance?
So I think the good news is that we aren't really seeing a slowdown in the growth rate. Rather, we see it being sustained, and and that has been sustained at a level which is slightly higher than what we had maybe pre-COVID.
So if we are seeing NCR, that is our biggest geography, if that continues to maintain its growth momentum, so which would be the market that we are seeing a slowdown as of now? Because NCR is among the biggest markets that we have.
Yeah, so I would, this is Om here. My sense is that Delhi NCR market has gone through 2-3 phases where there was a phase of a heightened competition. I presume some bit of a shift may have happened to them in the last sort of a couple of years. Many of our old customers whom we lost may have come back to us. So in between, we had a slightly slower growth in Delhi NCR. But as Shankho mentioned, that we are inching towards slightly higher number. Can it go up further? I still doubt, because we, in our business planning, we still don't want to project higher Delhi NCR growth because the base is too high and the market size is still 3, 4, 5 crores of this cluster. While all other clusters like UP, Bihar, Uttarakhand, they are firing for us, where the market size is nearly about 20-25 crore population. And so that's the way I would put it. Basically, we are very strong in Delhi NCR. Some of our customers who may have gone to the competition, they have come back in the last 8 to 12 months. This is what we are seeing, and I think SwasthFit's contribution also has pushed up the revenue growth. But I will still stay conservative on Delhi NCR and push the other markets.
Correct. And sir, have we seen any change in patient behavior regarding, because our patient volumes have been pretty muted for the past couple of quarters. So have we seen any improvement on this front?
There is an interplay that we are seeing between as the contribution for SwasthFit goes up, the number of patient visits are slightly muted. That may be impacted this growth, because what we are reporting as a patient volume growth is technically, they are not unique patients, they are patient visits. But in SwasthFit per visit, if you end up doing a lot of tests in one go, the number of visits may actually get reduced. So I think we are seeing some kind of interplay as the contribution of SwasthFit is going up. I have a sense that patient visits may be inversely related to that. I think that may be some impact that we are seeing. But I think overall one should see the sample growth, which is nearly about 9.6%, right? 9.6%, which is a combination of number of tests per patient into patient footfall.
Sir, that was actually very helpful. Can you give us some color on FY25-26 growth that you are internally projecting?
FY25-26 or 24-25?
For FY25 as well as FY26, any internal estimates that you would like to put?
FY25, I told you last time, we'll try and beat the FY24 number. So this quarter is 11.3 is better than 10.4. So I have a feeling we'll continue to do better and then definitely beat 10.4 of last year. As I mentioned, that September is a crucial month for the entire industry, not only for us. So let's hope. I don't know how it turns out to be, but I think I can confidently say that we'll beat the last year number. FY26 is a bit away. Shankho, you want to say?
A bit away. And I think just to add to Om, kind of adding to that, so beat last year growth number without without having to take a price increase.
I think that
is what we are trying to drive the sales increase. Yes. And once we see 2 or 3 quarters of this year, maybe we'll be in a position to then start looking at what the next year outlook.
I think October might be just good month to talk about FY26.
Perfect. Sir, and one last from my end. What is the strategy on cash utilization given that we have cash building up in our balance sheet? Is it dividend, M&A, something that we are looking at?
See, time and again we have said our priority number 1 is to look for strategic assets, inorganic, which are in South and West region. West we have done Suburban. If you look at contribution-wise, region-wise, obviously South is still very weak. We would want to fill that gap. There is no doubt about that. But we also need to have a quality asset in the right price, much high on governance, etc. So that's a given. In absence of that happening, because you don't know, that doesn't happen every month or every quarter. It may happen, may not happen. But in the meantime, we have increased our dividend payout, so which is also we are trying to balance between the two, and also investment in our new labs and technology. So I think combination of all these three is where we want to utilize our cash. Cash in the balance sheet is also good because our ability to do certain transactions can actually go up as well. So number 1 priority is to deploy this money for growth, primarily in acquisition, because it's a global experience that in new markets it's very challenging to establish organically. So one has to look at that.
Thank you so much, sir. This was very helpful.
Thank you.
Thank you. We'll take our next question from the line of Ashutosh Parashar from Mirabilis Investment Trust. Please go ahead.
Hi, sir. Thanks for the opportunity. So just a couple of questions. So on the 20 labs that we have planned to open this year, can you give us some color on the geographic spread of these labs? Are these likely to come up in the markets of Bihar and UP? And how many of these are planned for Suburban?
So, the primary focus is going to be, like we have been doing in tier 3, tier 4 geographies of North and East. That's where the primary focus is going to be. Suburban, there isn't really a plan to add too many labs. There are one or two maybe gaps which we will fill. We are still evaluating that. But this is more in our core geographies of North and East.
Got it, sir. So on the Suburban front, so it's been some time since we have integrated the acquisition. So are there still some gaps on like testing mix and all that we have to address, or we have largely addressed that?
So there are various layers of integration that are currently working. So from a test perspective, now the whole test menu which Lal Pathlabs operates is today available through Suburban as well. But having said that, there are certain background, integration, IT integration work which is still happening to make it even more seamless. That work is going to take some more time. But as of now, clients in the geography in which Suburban is operating have access to all test menu from Lal Pathlabs.
Got it, sir. And just lastly on the Swasthfit front, so what would be our average realization for Swasthfit test menu?
Sorry, can you repeat the question?
Realization for
Yeah, I think this is one information we have not made it public yet, so we would like to not share in the public forum.
Okay.
But definitely it is higher than the company average.
You see, my reading is you can do a reverse math in any case, right? 25% contribution, you know the portfolio revenue per patient earlier and now. I think you can figure that out, but the exact figure we have not really shared so far.
Sure, sir. No problem. Thanks a lot.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to management for closing comments. Over to you, sir.
Thank you everyone for being with us on this call today. We express our gratitude for your continuous trust and support. I hope we are able to answer all your queries satisfactorily. Please feel free to reach out to us in case you have any further questions. Thank you once again.
Thank you, members of the management team. On behalf of Dr. Lal Pathlabs, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.